Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, April 23rd, 2009. Well, folks, we're seeing a pretty neutral day on Wall Street. In fact, we've turned positive over the last couple minutes, and I want to show you what's been going on here. Number one, you can see that the market actually gapped higher after that ugly sell-off late in the day. Now, the interesting thing about yesterday's chart pattern is you had a beautiful MA pattern or M pattern formation on the spiders all day, and that's all of us know that's a big bearish pattern if it plays out correctly. And it actually did play out very nicely today, and I want to show you that again. Note the M pattern here. I love the higher high on the right side of the M. And then what you did basically today, you gapped higher but then sold immediately, came all the way down to equal this low right over here from yesterday. And I want to note that. Look at the low from yesterday, the low of the day really, when we really gapped down a little bit yesterday, fell all the way down here and then rallied back up. And that's before we started the massive run that took us into the highs of yesterday. But that low completed the M pattern, right? Because here you actually went a little lower, but you closed the candle right on that same point. And this is why technical trendline analysis is so important to do, folks. Can't stress that enough. You have to be able to do this because it tells you where patterns will complete, where patterns will form, and how they're going to play out. And what you can see today is beautifully done. Here's your M pattern. Here's your A, which was a bounce back higher. Where did it go? Right into the same level we opened at. What happened is the market flushed down, completing the A pattern down here to support. Now the support line is as follows, folks. The support line down there was at 83.60, 83.50, right in that 83.60, 83.50 level on the SPY. Now what you saw from that point on is you saw a little bit of a rebound, a retest of the lows, going right into lunch, and then note the volume, guys. Volume just dried up, and at this point, we should all know what volume, when it dries up, means. It means the market can generally float higher, and that's exactly what we've seen from the market. So the market's actually rebounded up to all our key levels. Now, first of all, note the green line right here, which was the low from yesterday. Notice how that was right here. We closed on that before we got a bounce. Then we flushed through it. Then you got a bounce. Notice how each candle hit that. 1, 2. And then you kind of came down a little lower. You fell back down. The next time we went up, we broke it. Remember, when a trend line gets tackled or gets hit, it gets weakened every time. It's like running into a wooden door. If I run in full strength into a wooden door, it's going to get weaker each time I hit it, right? Until it eventually breaks down. And that's exactly what we saw here. The green trend line bounced off of it multiple times, retested the lows, then rallied, broke through it. Where did it go? Right to the 20 moving average. 20 moving average got hit, started to pause. You got a 1-2 bar pause. What is that? That's an in spirit of bullish flag pattern, guys. Because remember, big green candle, inside red candle, inside candle. That tells us that there's a good possibility of another move up. What happens? It breaks through the 20, touches the upper green line. Now remember, this is the same green line from the low of the candle that we closed on yesterday. Note this candle right here yesterday into the close. There's your low. You need to know that spot. What happens? Becomes a key resistance area. You hit it once, hit it twice. On the third hit, you break through, and then you start to trade right into the same level of where the A formation was. Right into the high of the A formation here, guys. Alright, so please note that. That's where you start to trade up right here. Then you burst through it. You actually make a higher high. But notice now you're coming into resistance right up here. Alright, and there's your line. Where was that from? Well, that's from your opening upper range of the candles. Anywhere between here and here is going to be resistance. Why? Because when you gapped up today, these were the high points of the candles. So you have to know that. In addition, you have the 50 moving average sloping down now, which is going to act like a catalyst for a cap on this market. So not only do you go up to test these levels, but then you know you have the 50 moving average sloping lower. That's telling you immediately to watch out. There should be a red light flashing. Danger, danger, resistance, resistance. Watch for a possible pullback in this market. What's happening, guys? You're getting a red candle. Now, you do have a little bit of support right here, guys. There is some support right here at 84.65, 84.60. That is support right now. If we close back below it, though, that could yield another sell-off in the afternoon session. Now, again, the light volume's really been the trigger here. Notice these candles on the bottom. Ever since the bottom was hit, look at the candles earlier in the day, much stronger, especially this red one right here, big red candle for this big sell candle. And then look at the sideways action, non-event here on volume-wise, and that's exactly what we're seeing. So you are seeing no volume down here, and it is telling us that the market seems to be a little bit overbought in this situation on the near term. However, there's two scenarios that could play out this afternoon I want to go over. One is, if you hold this green trend line, and you stay inside bars. Remember, inside bars could still be looked at as bullish. So as long as you stay in from here down to this blue line I just drew in, those are all inside bars and could be telling us we could be on track to hit the 50 moving average up here, or even pierce it, maybe go to the 200 up here. Anywhere in this range is going to be major resistance. Major resistance on this chart, 85.20 down all the way down to about 84.90. So that 30-cent range is just, there's a ton of levels. I have a green trend line in here. I have the 50 moving average, the 200 moving average, and that could be all the scenario if we do inside bars. Now, if you close below the green bar, what I'd start to look for is, do we take out the low of this candle, the opening portion of this green body? If that happens, then I think you're heading back down to about 84.30 on the spiders, at which point, if you break that, you're going down to the 20 moving average, wherever that will be. Now, remember, the 20 slopes up, because price is above current price here, above the 20 moving average. So that could be telling us that by the time the market, if the market did come down, by the time it gets there, the 20 moving average could actually be right here with this green trend line. So just keep an eye on that. If that breaks, though, then you're looking now for the 84 level, and if you break 84, you could very well be in for a double bottom hit at 83.60 or so, 83.50. But that's what you're looking for right now. You can still see the market is floating up on lighter volume here. We still are in that intraday lunch period where you kind of get that feeling that the market is kind of right neutral, anywhere in that neutral range right now. And just to do a quick market check, folks, we'll do that for you in 1 second. But right now, again, you see a little bit of an uptick, so this could be telling us you're going to go retest this. So far, you haven't really taken out the low of this candle bar. It still could be inside bars or even another push, which would bring us to resistance right here at $84.85, which is the high of this previous candle. Then the 50 moving average, green trend line, and again, that's why I'm saying there's a lot of levels coming up into play here on the market that are going to be very, very big. Now, the other question could be asked is this a big M pattern? You know, could this not be the real A, and maybe this is the real A? If that's the case, then it's going to tell us that we could get flushed. Now, we're not sure on that yet. We're going to have to see how it plays out, but we're going to have to watch that very carefully, something in the coming day that will be very interesting to see later this afternoon, be interesting to see if we do get a sell-off. Remember what happened yesterday. They floated this market up until about 3:30, 3:20, and then they flushed it all the way down. So we're going to see, again, do we see selling pressure when volume comes back in later in the day today? Could that be a catalyst for a sell-off, or are we going to pop? Right now, you're seeing a good move up, retesting the high. This is that $84.85 level. If that breaks, you're going to look for 50 moving average, hit it again, just under $85. Then right here at 85.05 to 85.10. And then again right here at 85.20ish. Right around that 84.90 to 85.20 will be good resistance on the upside. Right now you are hitting a little resistance here as I do this video currently. Now there's a bunch of things I want to discuss, but again, one thing I want to just mention, folks, we do have the webinar this weekend. It's our methodology. It's how to calculate targets, how to know cycle activity, how to do all that kind of stuff, how to know how many candles until you look for a fall in a short position, you know, how to know all that kind of stuff, or how many falling candles before you look for a bounce off of, you know, because there's all these calculations that we've developed in our methodology that we use in our chat room. And again, this is partly how we call our levels. We teach you guys the basics in the premium service. Again, join the research center to get kind of the premium advantage, get the nightly 30-minute videos, get the Pro Trader watch list. All that stuff's included in that. It's really a fantastic thing. Everything but the but really the swing trade alerts and the chat room is included in that, obviously, in the webinar. So nonetheless, go join that, folks, and we'd love to have you on board for the webinar this weekend. You got to go sign up because we are filling up quickly here in the last couple days before, so I do encourage you to get a position. There's not that many left, and we do like to keep them small, so it's very personable. You'll view everything on your own screen. You'll be talking live on the phone on a 1-800 number to our Pro Trader, our Chief Market Strategist, Nick. He's going to handle everything. He's an amazing, amazing guy. He taught me most of everything I know. And again, guys, just go join that or come join the Research Center because you got to advance your knowledge. There's going to be some key levels here hit in the next couple days. We're going to talk about that in the Research Center tonight. I strongly encourage it, folks. Have a wonderful day. We'll talk to you all tomorrow. Take care.